happened since last Wednesday right over here. This is where we were a week ago. Now we're up here towards the right and seeing the price continue to move in the right direction. So it has taken a little breather, but one of the key trend lines I'm keeping an eye on is this one starting after the gap over here in November and lining up off of some of the subsequent lows, especially off of this one in late January. But using that line, we see we were below it for several weeks, but then coming back up on the upper side, it did act as both the closing price ceiling several times and the low price floor several times. It does appear that the price here is respecting this trend line. It's one to have on your charts just to take a look and see if our sideways action lasts for too long. Perhaps we're going to come back into contact with this and it will be a moment of decision. If not that diagonal line, certainly you should be watching for the previous high water mark over here from late March, where we topped out at about 52.70 or so. We did push and break through that. We're north of 5,300, and we've stayed pretty consistent right around that $5,300 mark. In fact, I did a historical analysis, and the 4-day period ending on Friday resulted in the 100th least volatile period over the course of the last century. So out of some 12,000 entries on a daily basis, that was the 100th least. So top 1% for low volatility because of that pin to the 5,300 mark day after day after day. So it was remarkable in more than one way. If you felt like that was surprising, you're right. It absolutely was. But this week, we've moved just a hair higher. We're now at 5,316, but still in that same zone, haven't moved markedly higher. That's for the S&P as a whole. And as we took a look on our daily dashboard, we could see that today we're down just a hair, and there's a few sectors that are positive, but the standout here is energy, losing 1.8% today. Technology up 0.5% are the big deviations here from the remainder. Other than that, relatively flat, maybe a little bit down on the average between them. But that's where we're looking as far as our starting point for the day today. As we have in each of our previous courses, I want to remind you that I welcome your questions and I will do my best to dedicate some time to answering them. But today we get kind of a special treat in that we're able to go ahead and talk just a little bit about sectors right now. But as soon as our half hour ends, we will start up a new class regarding MegaCap earnings. So if you haven't noticed, we added a class that starts right there at 12:30. So I will lead us right into that. Nick will go ahead and take over and talk all about NVIDIA's earnings, which are going on tonight, and some of the things to be watching and be aware of. So that's the key idea there. We will do our best to answer as many questions as I can, but time may be shorter than normal given that scenario. With that in light, be patient with me. I will answer as many questions as I can, but I will hold them until the end of the session. Let's go ahead and dive in then, waste no time, and get into the sector-focused idea. This is a chart coming from relativerotationgraphs.com, where you could also access this for free. I've gone ahead and grabbed specifically the S&P 500 sectors, and we notice that utilities, our sector of focus this week, is the only one far over here in its own universe to the right. This has had very strong momentum and has for quite some time. It's just kind of lived over here in the upper right, or at least the right-hand side, for quite a while. We notice it has now drifted into the weakening quadrant, whereas it had been in the leading for a long time. But weakening means it still is a leader, but perhaps losing some of its steam. And so thus far, utilities maintaining some interest for us. Other things to note, energy down big today, and you can see that it has been lagging, but kind of rounding its way more positive, finding a little bit more momentum and moving in the right direction, at least until today. This goes through yesterday's trading, so maybe we'll see a little bit of a change if we grab to this again tomorrow. Technology up here at the top has found its way back into the leaderboard. No surprise, it's making a little push again higher today. But there's other big changes in here that you might have missed. IXY, this one right here, consumer discretionary, losing its status as a leader, finding its way to a laggard. A few other big deviations, but let's go ahead and march our way forward. I intended to show this for you. I apologize, folks. There is the key if you wanted to remember what those are. I'll give you just half a moment to grab your screenshot, but you can see the naming convention on these is a little different than what we use in some of the other places because it's coming from a different data source. Next up, we'll go ahead and swing over and take a look at our sector performance data. This one comes courtesy of downloaded data from Fidelity's Active Trader Pro. And this is looking at a year-to-date view on each sector's performance. Year-to-date, almost every sector is now positive. Real estate's made up some ground in the month of May, but unfortunately still maintains a negative for the year. The S&P now over 10% positive. Back at all-time highs, that's pushing in the right direction. It's coming from financials, information technology, communication services, and utilities making its way into the list. In fact, one to number 3. It is up in itself almost 15%. Once we accounted for dividends, it certainly would be in excess of 15%. But nonetheless, we're looking at a pretty handsome return for the utility sector. And if we go ahead and compare this to what this chart looked like at the end of 2023, that's a big difference, especially for utilities, which was the worst performing sector last year, resulting in a 10% loss. Again, price performance alone, excluding dividends. So unfortunately, a 10% loss for utilities last year. But this year, greater than 10% positive, making up for last year and starting to put in some positivity for the 2-year investment return for this sector. Consumer discretionary, which was one of our biggest leaders last year, still out of play, relatively low on that totem pole in terms of relative performance. So we do want to recognize that's a big difference. There also is energy over here. It has been a laggard perhaps recently, as we saw in the relative performance. However, when we look at it here, year to date, it is still doing pretty well, almost 10% positive. So that's our year-to-date viewpoint. Let's zoom in just a little bit and think now instead on a monthly basis. Here is May month to date, and you can see that the information technology has pushed 10% positive. 10% positive. Let me bring up the yearly chart again for you folks. It's only 15 or 16% positive for the year, and this month alone has been a 10% positive. So make no mistake, information technology had fallen out of favor there for a moment, but after a 10% rally, it has come back into vogue. Utilities showing up as the second best performer for the month of May. 9% positive almost here for that month alone, the last 3 weeks worth of trading. Very impressive results over here from utilities. And like I said, real estate doing its best to make up for lost time. Year to date, still down, but 6% positive, beats the S&P 500 and is undoing some of the damage it experienced previously in the week. Utilities, our big focus for today. If we glance backward just a little bit, this is January. This is how we started off the year for utilities, down. For the month of February, every sector positive, utilities the worst of them. Then we see things shift. In March, we get a relatively positive month, energy taking away. But then utilities at 6% positive for March. Utilities, the only sector positive in April, and then maintained its positivity this month, yielding us a positive 8%. This has been the big change here, a shift in utilities over the course of the last 2 months. So that's what we wanted to make sure we were bringing to light and understanding in this big shift that we've seen in performance, especially for utilities. If we bring it over and take a look now at our heat maps, these are custom made by me for you in this class. So if we go ahead and pull this up here, folks, this comes from data downloaded from Fidelity's stock screener, and you are, of course, welcome to do the same. But as we go through and take a look, this is the last week's worth of price performance. The brighter the color, the more positive the results, or the more extreme the results might be a better way to say that. We can see consumer staples, especially Walmart, doing remarkably well. We see a lot of positive performance over here. And then, yikes, semiconductors, including NVIDIA, through yesterday, up 4.5%. Big positive for NVIDIA as it leads into its earnings. I'm excited to hear what Nick has to say in just a few minutes about those earnings and things that we should be listening for in that conference call this evening. Other areas of that same industry, very positive as well. But our focus is instead over here in the utilities, and you can see over the last 1 week, this is about a 1.8% positive of the last 1 week alone. If we click into it, we can see price performance in some of these has been pretty impressive. Specifically over here, we've got VST up 3%, and its industry, the independent power and renewable electricity producers, up 3.2%. Some pretty impressive results there. If we back the chart up a little bit further to look at 4 weeks worth of data, again, I'll zoom into utilities. Over the last 4 weeks, 10% positive for utilities. You'll get slightly different numbers here because I'm not using a specific month, but rather 4 weeks worth of performance. But as we look over 1 month's worth performance, there's a strong positive tilt going on here. Most impressive is right here. Again, independent power and renewable energy, 33% positive over the last month, folks. 37% for VST. We will get a chance to look closer at this chart in a few minutes, but I do want to make sure we point out it's not the only positive part. In fact, the entire sector was on an absolute tear moving positive. I went through and did some studying up in preparation for the class, and it turns out over the course of the last quarter, 13 weeks worth of performance, sorting the S&P 500 stocks by their performance, again, this is price performance, 3 of the top 5 stocks in the S&P 500 came from the utilities sector. 3 of them. We're going to take a look at them if time permits here towards the end. And out of the lowest, there was only one stock in the entire utilities sector that was negative during that 13-week period. So certainly it has been a broadly participated in positive rally. It was actually this one that was negative on the quarter to date XEL. But we'll go ahead and dive a little deeper into this in a couple other ways. We've looked at seasonality already for utilities, but here's your update and reminder of what seasonality has looked like for utilities. I believe we've now covered seasonality in each and every sector. This is one where we see that late October to November has a bit of a negative tilt for utilities. But other than that, there's not a real strong deviation where it moves far, far beyond our 0 line and stays there for a long time. If there is one to point at, it's actually where we're trading right now from late April into May. Pretty positive. We do dip negative for just a moment before coming back above. So the summer months do tend to be a little bit positive for the utilities in general. Maybe that's based on expectations for additional utility usage as people turn on that air conditioning. I know down here in Texas, it has already started to get hot, and I'm looking to turn that AC on more and more frequently. But one way or another, explained or not, there is some positive seasonality during the summer months for the utilities sector. As we dive in and now take a focus in on our sector screener, this is what drives that heat map that I showed you just a moment ago. Here we've got a look at some of the different details on the various parts of the market. So I would like to call your attention first to the overall construction of this. This is, again, something I custom build for you each week so that I can present the information to you. It is one, as you can see, done in Excel, and we will be going over how to create this when I run my Excel class next month. I know I've offered or reminded, even been persistently asked, when is that next Excel class? I officially have the date. Grab your pen and pencil. June 24th, almost still a month away, but June 24th at 2:30 is when that Excel class will be. I will show you how to create this yourself so you can go ahead and create it, update it, make any changes you would like, find the details that are of interest to you anytime you would like, not just on these Wednesday sector updates. So again, June 24th at 2:30, if you're interested in joining me, that will be your opportunity to do so, to see this rebuilt. I hope that works for those of you that are interested in scheduling and building this yourself. In the top left corner, we can see I've chosen utilities. That means that we're going to be looking at the industries here in the utilities sector. And as we glance across, I already told you there's 31 stocks in the sector, but that makes up just 2% or so of the overall weight in the S&P 500. So it's a relatively small piece of the grand total here for the S&P 500. But it's one that's interesting in a few ways. Number one, it's often looked to as a persistent and consistent payer of relatively high dividends, 3.1%. That puts it only behind this one, real estate and energy, in terms of average dividend yield for the sector. And as we look at its price to earnings ratio, coming through at 21 in trailing earnings or at 17 in forward-looking earnings, that is as good as any except for energy. Energy does take the cake, but it puts it in a firm second place for general price to earnings valuation in terms of how expensive or not it is for you to buy in. Now, that's likely based on the fact that earnings for utilities tend to be regulated in at least some way. They can't just double and triple their prices at the utilities because of government regulation in many instances. As a result, their earnings tend to grow on a relatively stable, predictable course. However, as we take a look over here to the right, it does mean that they tend to lever up quite a bit. They buy quite a bit of their money by borrowing. They go ahead and borrow in large quantities. If we compare this to some of the other areas, we've got, in terms of overall debt, this is amongst the higher debt areas in the market. Why? Well, they've got to go ahead and make their earnings on some basis. If they can't crank up the rates that they are charging, they have to use leverage in order to get a worthwhile return. And so they do use some leverage instead on the basis of their relatively stable income from you and I turning on that AC. If we look at the various industries within the sector, we see that utilities has the electric utilities, gas utilities, independent power and renewables, multi-utilities, and water utilities. In the end, all of them except for water utilities have some electricity variety, but they're going to be subdivided to try and make a little more sense between them. In the end, even those that are classified in one or the other, for example, we're going to take a look at VST, which if we scroll over here to the right, we notice is listed here in the under independent and renewable electricity, but they also work with natural gas, which is not a renewable energy, in their energy production as well. So there's a number of different cross contaminations you might look at in here. Largest is the electric utilities at $700 billion. Multi-utilities next largest at 287. But all told, each of these is a relatively small piece when we think about the behemoths in the industry like are Microsoft's, Apple, and Nvidia, which are each well in excess of $2 trillion, and Microsoft currently the sole titan in excess of $3 trillion. Utilities as a whole, all 31 companies in the utility sector make up less than 3 trillion. In fact, they barely cross over the $1 trillion mark. So yes, this is definitely the smaller piece of the puzzle in terms of relative proportions. Price performance has been most notable here, like we pointed out on our heat map, for the independent power and renewable energy. Glancing to the right and knowing there are only two stocks, you can guess that at least one of these was a very strong performer, and it is VST. That's why we're going to take a closer look at it. But even if we look at a 3-year total return, 56% of annualized return for independent power. This is an amazing rally, and we'll look at that story here in just a moment. Price to earnings ratio is at 50. However, its forward estimates at 14. That is a substantial difference, and it tells us that for whatever reason, this industry within our overall sector has a high expectation for growth of earnings to justify its current price. And that makes sense. You can't grow by 100% year to date, effectively doubling in price, without some expectation of substantial price to earnings growth, some substantial earnings expansion as we work through that. So let's go ahead and without further ado, take a closer look at the charts so that we can give ourselves time to look at these before we end up closing up and addressing questions. We'll come over to the utilities chart first, and here we will use XLU as our proxy for the utilities sector. This gray vertical line is where the sector was last time we had our update. This was March the 6th, 2.5 months ago. We were looking at this same chart, but it was a little different flavor back then, noticing this negative tilt that we were just breaking out of. Well, now we've been on an absolute tear higher ever since really the middle of April, but it did begin and bottom out even in February. So our 3-month performance for the sector has been dramatically positive. Nonetheless, you see some of these other lines I've drawn in. Let me give us some perspective by zooming out to a 5-year chart. Here I've got a long-term channel showing up, going up, 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 and we see that the price went up, it went down, it found its way to the peak, found its way to the trough, over and over to the bounds of these. And the few times it exceeded it, were quickly reverted all the way to the opposite extreme, to the opposite extreme, to the opposite extreme. Well, in our downwards channel that occurred more recently, we see to the bottom, to the top, all the way to the bottom and exceed all the way back to the other side. Well, we're seeing this kind of channel-like behavior, and we're seeing that the few times it breaks out and fails, it finds its way right on back to the other side. I bring that up because when we come back in and look at this on the 1-year time frame, we might be starting to see somewhat of a channel showing up with this as our bottom line, and instead this as perhaps our top line. Usually you want to draw them as close to parallel as you can, but go with me for just a moment. If it's breaking out here to the upside, just be aware that if it comes back, it is likely to not just come back and stop here, but if history is any guide for us, we might see it come right on back down and find the lower end of that channel, not just the upper end. It's had momentous push higher, but that doesn't mean it has to stay there. It has had occurrences breaking out of the channel in a positive way, only to revert in a substantial and even momentous move to the downside. So be aware and watch closely for a change of the tides if we start to see that occur in the utility sector. Thus far, hanging positive and very big move over the course of the last 3 months. Now, let's go ahead and dedicate a few minutes to these top performers in the sector. VST is going to be our first one. This is a 1-year look back, and take a look at this chart here, folks. NVIDIA is announcing their earnings today. We've got a special session dedicated in a few minutes to looking at those earnings, but if you understand this chart here, folks, this is as positive as anything there is out there in the S&P 500. In fact, this is the top performer over the course of the last quarter. It has absolutely moved in a monstrous way from $25 per share, now trading at almost 100. In the last year, you've had an opportunity to 4x your money, 4 times. If I go ahead and pull up the details for Vistra, the name of this company, we'll see that this one was incorporated in 1882, and it's just down the road from me in Irving, Texas, 882, but it's got a broad portfolio of various parts. It works in the electrical and natural gas. They work in residential, commercial, and other areas. A really big utility company, and its performance has just been astoundingly positive. Our next one on the list, also a top performer in the last 3 months for the S&P 500, CEG. It comes with a little less stability. You notice that Vistra was almost a straight line or almost a parabolic line, that it was just growing in that curved but positive way constantly. This one looks a little more typical for a stock chart, doesn't it? Constellation. As it moves up, it had a huge push higher right here in late February, and then flattened out in the month of March, and only recently has continued on with that positive momentum. But nonetheless, when you move from 85 to now 220, again, an opportunity to 3 times your money over the course of the last year with Constellation. But a big difference in this one when we go to its stock profile. This company was incorporated in just 2021. So could it be that a new company could become a top performer, could join the S&P 500? Yes, even in a relatively boring sector like utilities, there is new and rising stars that show up. Constellation Energy, certainly one of those in the last 3 years, making its way into the S&P 500, and not only that, now continuing to grow in a pretty substantial way. My only concern is, where are they getting all of these profits from, folks, if not by inflating the cost of that monthly utility bill for you and me and each company that they charge. So be aware that they are getting their profits from somewhere, but an absolutely impressive chart from Constellation as well as Vistra. Now, we've only got 2 minutes left. Normally, I run right through time, and then we go ahead and hit questions. I'm going to do my best to answer any questions I can in the remaining time. So the first one I'm going to address is, how do I get into this NVIDIA session if you want to go ahead and do so? You don't even need to register for the session. What's going to happen is you're going to go ahead and keep your browser open. For those of you that have your browser open still, when I close the session, just keep that open, and in a few seconds, about 10 seconds or so, it will refresh, and you'll be able to click Join Event Now, and you'll be right back in the same room, but with Nick leading it to talk all about the NVIDIA earnings. So hopefully that works for some of you. We had some questions in regards to what's happening overall, but let's take a look here on foreign exchange currency. So Stephen was asking, how does foreign exchange currency pairs affect S&P 500 companies? Utilities aren't going to be affected as much in foreign currency because most of them are domestically involved, but any of that are involved in dramatic multinational or international operations do have a substantial currency fluctuation. Some choose to hedge out that risk, Stephen, by using futures or options to offset some of that potential and expected foreign currency valuation changes to instead stabilize their profits. But that's what you're looking at overall. Let's look like that takes us already to time. I'll save more time for questions. Next week, we'll be back to having our full time afterwards. But what I'm going to do is now go ahead and close out the session. Go ahead and stick around for those of you who are. If you closed your browser already, just go ahead back to fidelity.com/coaching, click on briefings, and you'll find that there is a session right there ready for you to hop back in. It's labeled MegaCap Earnings, I believe. But I'll go ahead and close things out. Join back in just a second, and you'll be right back here. Thanks for being with me, folks. My pleasure to be here with you today. Take care.
We'll just give everyone about another 30 seconds to filter in as we go ahead and get started. Excellent. Looks like that's about enough time. Just wanted to be sure gave everyone an opportunity that wanted to jump in that could jump in. Of course, welcome to this afternoon session or this morning session, depending on where you are. My name is Nicholas Liss. I'm with the Trading Strategy Desk. And today we're going to be reviewing a couple different mega cap securities that have their earnings coming up over the next week. Three of the big ones we're going to be looking at, of course, NVIDIA will be announcing after the market closed today. We'll probably be taking a little bit of a deeper dive into that one since that one is this afternoon, as opposed to Salesforce and Costco, which we'll be announcing next week. Um, but with that, so, if you have any questions, feel free to send them into the Q&A. I'll try to get to them as I can, but with just one of me, it makes it a little more difficult to also present and take a look at those questions. If we have time at the end of the session, I will try to touch on as many of those as possible. But with that said, again, thank you for joining us, everyone. And let's go ahead and get started into the material and information. One of the first things, of course, is we pull up a couple different charts and such that I was looking at, both in AccuTrader Pro and a couple other places. And we're asked if we could share recording. Unfortunately, while this might show it's being recorded, we don't post recordings of these sessions online. So unfortunately, if you miss any of today's session, you've missed today's sessions. And hello there, Christine in Chicago as well. I know you're also Central Time Zone like I am. So good morning as well there. That said, let me go ahead and shift over, and I want to share one of my the first screenshots I'd pulled up and to take a look at. And this is kind of the expected movement of NVIDIA here. And so this is a quick screen grab from LiveVol, showing how much movement traders expect, how much actually had happened. This, of course, is all based on option pricing. And so, we can see, of course, the market implied volatility is, quite a bit higher than has been in some cases in the past. We have an IV post earnings of about 36%, which correlates with a roughly 1-day move of just over 2%. We can divide that number by 16 and such. So there's the implied move of about 7.6%, and on a higher valued security like NVIDIA. Let's go ahead and just shift over real quick, to the chart with that $950, that 7.6%, down is it's about $72 down. And so with it being a $950 security, we'll round these numbers just a little bit. We'll draw up here on the chart. Of course, drawing down to 875, give a nice round number, and we'll then draw up. And I know this is going to be up beyond higher than where the security's been at before, because we haven't busted that 1,000 price yet, but be up to 1025 on that top side. Now, some other levels to look at, and this is something that we've talked about in the past, is if we look right about in here, let me zoom back into the most recent 3 months. And this is purely looking at it from the technical perspective. I'm going to delete the 200-day moving average off of this, so we can drag this a little bit taller, and we can see a little bit of that resistance in here. Support, boom, resistance, support. So that's about the 895 range, 900 range. So not as big of a move down would be required for that to kind of kick in. But it does much more than that. See a little bit additional support in here, resist a little bit of that zone in there as well. Now, something else I wanted to add on, if we're looking at it from a Fibonacci perspective, you expect this to continue. See, we get a little bit of Fibonacci traffic in that area as well. That 38.2 could act as a support line in between that 895 and that 875, within the 50% retracement being about 858 on there, if you then expected this upward movement to continue. Now, if you're looking for a reversal, this could put it quite nicely with, you shift this over and draw this up. Look at where that top is. It can almost be a 1, 2, 3 triple top, or if you go, that's not close enough, this is a double top. This could simply also be a topping pattern. And so, really from a technical perspective with this, bulls are going to see it break up above this. It's going to need to break up above that particular level to technically increase and such. Some other things jumping out that I wanted to call everyone's attention to, not just that expected move versus how much it's moved in the past, because everybody that's been paying attention to Nvidia remembers when they had that a couple stellar moves there, where the one that kind of jumps out to me is where it moved up $90 afterwards, which I think was this one right here, moved much larger than expected. But just after those two moves, we see, of course, get a big move, we get an increase in expected move, get another big move, another increase in expected move. But then look what happened here. Well, Nvidia didn't really get that movement here, and so we had a decrease, and then we had a smaller move again. Though shifting here, traders were expecting something more to happen, and that's not exactly what it did. So the question is going to be, is this going to be a non-event? And we're going to get an announcement, and we're going to stay in the 900 to 950 range, 900 to 1,000 range, not dropping below that support, not going up above $1,000. In which case, it might look something more like this, where we're getting less than expected, only moving about 5% versus 7.5%. Or are we going to get one of these outsized moves, and it could be outsized down or outsized up? Just a couple different things to think about with that. Now, let me shift over. I do also want to share a quick skew graph that I had, because I thought this was interesting with this. Of course, we have the at the money, and then as we go below or above the money, implied volatility kind of drops off a little bit. And then naturally, as we go much further above or below the money, well, then we start to get that more typical smile, so to speak. Though it is smirking a little bit on this other side right here, but we get what we more expect with that, where increased volatility, of course, for it to have a move down 50%, a move up 50%, over a short period of time, even to justify a nickel premium, IV has to be quite high to justify that. So it's just something to think about with that. A couple other things I'll draw everyone's attention to, since this is looking at earnings. I pulled a couple screenshots from Icon, from Refinitiv Icon, kind of talking and highlighting their earnings quality. And this was something that I thought was a little bit interesting. When you're looking at some of their scores on here, I haven't seen many of these where it actually has that model summary being so high with that. Now, that said, what's one of those other things that I kind of jumped out to me is a little bit different? Property, plant, and equipment only up a little bit here compared to, I remember 2 weeks ago, 3 weeks ago, some of the other big technology companies that we're looking at had very outsized growth and expenses of property, plant, and equipment. They're investing in new factories and such. They're buying new equipment. And while this is little, this is up, it's not as high as some of those other ones. And actually, take a look at the industry mean. Right here, it's right about the industry mean, as opposed to being 20% and such. Where they're a little high is when we look over here to accounts receivables. That's where things kind of lift and show it to be quite a bit higher from that particular standpoint. So I thought that was interesting. And when you look at, you kind of ask, well, what might be causing that to be, higher. It's all about, the differences between what they had in the past. It's just having higher receivables and such. Um, some some analysts, of course, they might take a look at the receivables turnover and such. Wanted to ask the question: Are receivables, are they increasing? Are net receivables approaching 48 days instead of 45 days? Are they having a harder time collecting? Because what you don't want to see is you don't want to see them sell a bunch of chips to a couple different companies, and then those companies that are trying to develop something, well, they're not profitable, and so they're slow paying, or maybe they won't get paid. So you don't want to see accounts receivable, of course, to be too high, but big companies they do work on net credit, and so it's not just they sell something, it's cash. It's you have the expectation that when you're going to be selling something that might be 30-day terms and such, and so it's definitely we want to do more digging into their reported statements to see where that number might be, how that might be changing. But you definitely, from a turnover standpoint, you don't want to see that increasing, where that net days is increasing. It's becoming longer and longer and longer. That would be a bad sign on there. But if you see net days is decreasing, where they're able to collect in 30 days versus 35, but still accounts receivables going up, that could then be a sign that they're just simply selling more from that particular perspective. So, a couple interesting things as it related to that earnings quality. And here we have a little bit of a chart where it's kind of showing price here on the bottom, earnings quality up here on the top. On that, showing some of those differences, a little bit of historic valuations. Again, exclusions are one of the big things that have been read for it, and it's just a couple other things to think about. It's dealing with special items and such, those different components that might be um, impacting and affecting things. And so uh, that's some areas of the earnings statement when released that you'll want to look at, that you want to pay attention to from that particular standpoint. So a couple other things to think about and to look at is, let me shift over to here. And Refinitiv actually does provide a price target, and a lot of this information, from a price target perspective and such, you can actually find through the various research reports that Fidelity offers. And so, even though I'm kind of pulling this from another system, as a Fidelity client, you actually have access to a lot of this particular data. So with this, we can see the breakdown on those that are familiar with things like the equity summary score and have likely seen the Refinitiv versus ESG, so to speak, where it mentions it has so many different analysts that they leverage. This is where you can kind of see that breakdown. How many are strong buy? How many are just buy, hold, sell, strong sell? So 1 to 5 stars, a little bit of a aggregated with that, where we can see as opposed to buy, or I should say as opposed to overweight, their buy, as opposed to buy, their strong buy. Just a little bit of a different way of saying things depending on the source that you look at. But I always like to take a look at how these are trending, and we can see strong buy 19 to 20, buy went from 32 to 33, hold still a 4. And so really what had to have happened here is added one more analyst to this particular level. So we had one more analyst up here who joined and then said buy, one that joined and said strong buy. And so that's really the difference we're seeing here, is we're seeing additional analysts that were added versus there being a shift, so to speak, where it's not a shift from sell to buy, or hold to buy, or strong buy to hold. we're actually just seeing additional analysts, being added with that. And we can see as the recommendations change, they're getting slightly stronger with adding those analysts. Prices also move, according with that. That current net recommendation, 1.72, are really leaning more towards the buy versus strong buy, just because there's more analysts there, and of course a couple holds averaging things out. They do have a price target. I always like to point this out: $10,052, about $100 higher where we are right now, about 10% greater than we are right now as well. So a little bit of a different look at this, a little bit of a zoom in look. Again, we see price, and this also has a little bit of a target price on here as well, where we can see this is a little dashed line right here, and we can see target price was up a little bit. Price finally came up, met target price, and then both leaped up here. Target price leaped up again, kind of stayed up here as price kind of continued sideways, came up, met it, both leaped up, and then target price has gone up a little bit more, again to that 1050 range, while actual price faltered a little bit from that particular perspective. So a lot of interesting information to dig through and to look at. So that was, of course, NVIDIA. A lot of information on NVIDIA to look at, a lot of things to look at. The Bill, I know you mentioned, takeaway from NVIDIA, implied versus actual chart. It seems to be that implied has a little correlation to the actual. So yes and no with that. And I'm going to shift this back over. And so I always think this is interesting because the implied is how much movement option traders expect in the security, up or down. And with this, a call is a put is a call, because you can always, if calls are too expensive and you want to buy a call and puts are cheap, what might you do? You buy a put, you buy the stock that's synthetically the same, therefore it's going to push up. If puts are relatively cheaper than calls, well, people will buy puts and buy stock, and then they effectively buy a call, and vice versa. If puts are relatively more expensive than calls, they might buy a call and short the stock to get that same exposure. Therefore, puts and calls will increase, will decrease together. As traders sell calls, sell cover calls because they expect less movement, well, it's going to push both calls and puts down. As traders buy calls, buy puts to speculate, to hedge, it's going to lift both of them up. And so this doesn't necessarily mean, traders aren't always correct. Just like how with target prices, analysts aren't necessarily correct. But this is traders voting with their wallet. The more movement they expect, the more that they're going to either, ask for the options they're selling, or they're willing to pay for the options they're buying. And so this is just showing that expected movement. Now, these back here caught a lot of people off guard. We shift back over. We're going to take a look at the 2-year time frame with NVIDIA. We'll drop on here earnings, and we can see one of those right there. That, of course, was looking at 1, 2, 3, 4 earnings ago. Big jump up, big shift, and just for comparison, we can see about a 26% upward move with that. Now, the one before, zoom in real quick on that one, also a big jump. And this one was, just moving this like this, you can see about 15% upward move. So again, you caught traders off guard. That if you're looking at how much a stock has moved in the past, and it's moved 6, 7, 8%, you expect it to do that in the future. Obviously moved quite a bit more than expected. So let me kind of continue on here to look at a couple other names. We then have, of course, Salesforce is the next one I want to pull up and I want to look at. So Salesforce, here we have their implied expected move, that medium implied move about the same, the 7.6%. Though this a little bit different with the valuation of Salesforce, what Salesforce is trading at. Let me shift this back over and pull back up the Salesforce chart. They're only a $285 security. Well, 7.5% on that's about $21, $21.30. And so 285 minus 21 puts you at 264. 285 plus 21 puts you at 306. Let's go ahead and drop those lines on here as well. 264 and 306. And we can see a little bit of this interaction over here. Let me delete the 200-day and pop back a little bit. I'm going to draw two more lines. One right there, and then one really up here. And then also you want to be paying attention to, this has kind of caught my attention. It's going to catch a lot of other traders' attention. We'll extend this out to the right. And we'll darken this up. So I did this line right here because while this might be showing the expected move down, technical analysts will be looking at something more like this red line. A little bit of resistance here, broke it, bounced, bounce, bounce, bounce. And that's that 268 price point versus the 264, 265 price point. So traders might expect, well, if it can break this, well, you're then really looking at, something much lower, potentially the 250 or even lower. It could really move down a lot more if it does break that. They're going to want it to at least come up, the bulls at least up above the 295. But really, they'd like it to see go beyond just that 306, really beyond 310, 315, and set new relative highs from that particular perspective. So let me shift over real quick. Skew with this, a little less of the smile, more of the smirk, where we can see expectations. Security can drop a lot quicker than it goes up. A little bit different look than NVIDIA with this. This, might be more to what traders are used to, where they're seeing, out of the money puts costing quite a bit more relatively for how far out they are compared to out of the money calls. But you do still see that really start to lift on those shorter dated options. This right here, this little bounce right here, this is the one expiring this Friday. I did think it was a little bit interesting to see these much longer dated options have that little bit higher volatility built into them than what's going on in a shorter time frame. This really, what this is telling traders is that options traders are expecting to be very little movement today and tomorrow. They're expecting the security to kind of tread water, to kind of move sideways, over the next week, leading up to earnings, and then potentially get a little bit of a larger earnings event than expected. So that's a current implied move. I'm sorry, 5.8%. I mentioned 7.6%. So really on a $285 security, that's a 5.8% is shifting over to be about $16.50 versus the $21, which actually would put it in line more with that support. 285 minus 1650 puts you at 268.5, which actually really lines up with that support right there. It then draws this line down a little bit more from that particular perspective. A couple other things. I do also want to point out, want to talk about target price. Analysts have, I want to talk about also the earnings quality information that analysts have. And this is not quite as rosy as NVIDIA. And we see more analysts here in the hold versus the strong buy, average ranking of 2.06 versus that 1.7. But we see similar things. Price has been upward trending with that as things have shifted. Target price 336, still quite a bit higher than current valuation of about that 285. Slightly different look at this, where again we can see target price here a little bit easier. Kind of started to fall down as the stock went sideways, kind of drooped a little bit, and then lifted, big upward movement in the price, and then we see this, and then kind of drooped a little bit. And so the question will be, from that analyst perspective, will things get readjusted? Will target price kind of droop back down like it did in this, or will we get a nice pop back up and have price come back up and meet those target valuations? Some earnings quality information. A little bit of a shift over here. A while back, not so good. Things are doing a lot better, so to speak, but still exclusions is where that's at. And we can see exclusions, 82 cents, caused that reported earnings per share not to beat the estimate, previously with that back in January. And so a couple of things to look at, to think about from that quality of earnings perspective. Still about an 81, not the 100 that NVIDIA had, but this has been more similar to other securities that we've pulled up and we've looked at and talked about in the past from that particular standpoint. Interesting, of course, with PP&E, this is actually negative here versus positive, and decreasing some of those things with that. But that accounts receivable number isn't nearly as high as it was with NVIDIA. So still kind of moving through. I know we're kind of coming up on time. I do also want to talk a little bit about Costco. Now, one interesting about Costco from their earnings perspective is they do actually break down, store sales versus membership. I know we'll talked about, Costco versus, Walmart versus BJ's versus, those other clubs. And Costco does actually break down their membership sales as part of their revenue. So that can provide a little bit of insight, so to speak, that if they start to have, greater and greater membership sales, members, more people might potentially be spending money there. That could be a nice shift, something to look at under the hood of Costco. Now, they're not expected to move nearly as much as a couple of the other big names are, so to speak. So they're not a technology company. So 3.7% expected move on the company versus 5.5 versus 7, etc. With that, so let me just pull them back up with their chart. And while they do have that loftier price point, compared to Salesforce, they're more like NVIDIA. 3.7%, only about $30. And so $805 minus the 30 gives you $775. And we'll draw that right there, 775 on the bottom. 805 plus the 30 is 835. We'll draw this on the top so we can see this. And let me kind of zoom even further out just so everyone can really see this. That we'll zoom back in. So traders are really expecting on that upside, just really swing up. We're already trading at all-time highs with Costco moving down. 775 really, it's about the one area where it kind of checked for support recently. Kind of resisted here, had another print here, and then boom, dropped further down below. couple other levels on the downside to think about. One about right here, touched here, resisted. So about that 788 on particular level. So if things miss, they're not so bad. If they just kind of go sideways, it could drift up above the 790 range, 790 to 800. Other levels to think about. See these particular levels right here, about the 745 area. You could see some interaction with that. A little bit of a couple interesting things I saw with this, just from a trend perspective. Previously we had that, and then a little bit of a fallback like this, and then now we're going back the other way. And we had earnings on here, and see last time this peak, this dump, again due to earnings. So traders going to be asking themselves, taking a position on this, will things be favorable? We had earnings, earnings, earnings. These three right here, this kind of helped the launch start, help continue that particular uptrend, because before it was really coiling. We had earnings here, and then really helped to lift it up into that uptrend. That uptrend, of course, was stopped by previous earnings. Maybe the term downtrend before things started to recover. We're back up above that level, and so earnings could really be that catalyst for Costco. A little bit of skew information with Costco. A little bit even further over here, the left like this, even further than Salesforce had. Traders, of course, can feel, frequently feel things can move down a lot quicker than they can move up, and options are priced accordingly as well. So here's then another quick snapshot of that same recommendation grid for Costco. We can kind of see a little bit of the trend of analysts. We see 16, 9, 16, 9, then drop down. One went from strong buy to simply buy, while the holds stayed consistent. So even though this has the recommendation mean the same, it did shift a little bit down with that particular recommendation change. So here again, we do, of course, do want to point out current target price 787, a little bit below the 805 that we're currently at, and so price has exceeded a little bit target price. Again, some of this information that it might get changed, might get updated, depending on what happens next week, and so that could be an additional catalyst right there. Target price stayed consistent. This was that period where we really had that coiling, where we had lower highs and higher lows. That coiling before the broke out above. Target price was kind of leading things with that, and then both price and target price moved up. Price extended past. Target price lifted finally. It's a little bit of that shift with earnings there, that securities dropped due to earnings, but target price went up with that, and then now we're back up to that particular level. Quality information, a lot more green up here than we saw with some of those technology companies. A couple highlights to think about from that particular perspective. Same store sales are doing, their expenditure ratios and such to think about and to look at, and still a little bit of a difference there in earnings quality. The overall score, more on a Salesforce versus NVIDIA. Like I mentioned, more frequently see something more in the 80s versus the 100, like what NVIDIA had. But things are going to be different from an industry perspective. In comparison, we see that PP&E number, industry median, is that 6.3% versus 1% with the technology companies. With that, though, I know I'm past time, been talking for quite a bit of time with that. hopefully I've shed some light on these particular companies. Hopefully it's been really good information. Looks like I was able to touch on most of the questions that came through. Again, I want to thank everyone for joining us, for spending time with me, for spending time with Jake and such. Hopefully you found this to be a good and valuable use of your time. With that though, again, I want to thank everyone for joining us, and we'll see you back in some of our future sessions. We will, of course, wrap everything up with our aftermarket brief. And in just about 25 minutes, Constant will be back for his volatility primer. He's going to dig more into volatility specific information. I have a suspicion he's probably also going to take a little bit of a look at that interesting skew chart with NVIDIA and other things around some of the other companies that might be announcing earnings today to really highlight what traders are looking at today. With that, take care, everyone. See you in the future.